Welcome back to my channel, Get Real Estate Fit with Shayla Twit. I'm here with none other than Jimmy Cirillo with GCM Insurance. Hey, Jimmy.
How you doing, Shayla? Thank you for having me today.
You're welcome. I thought it was really important for us to cover some of the really pretty major changes to the Florida map, as it's going to affect a lot of our homeowners. Yeah. So I've got a little cheat sheet here. What would you say is the maximum premium policy that someone will pay?
So first of all, what's happening right now, it's the first time that there's been a change in the way they rate flood policies for the first time in almost 50 years since the program was initiated in 1968. What's coming into effect October 1st is Risk Rating 2.0. So it's a completely brand new methodology and the way they rate flood insurance. So to answer your first question, they did put a cap on the maximum amount that any one homeowner can pay. So that cap is $12,125. That's the cap. You're typically not going to see that unless you have a large scale home that's on a barrier island directly on the water. But $12,125 is the max that you will pay as a single family home owner for flood insurance.
That would have been my first question. So that's really good to know. I guess, as a realtor, we want to know like the areas that are going to be most affected. So if you can draw like a little bit of a mental picture for us.
Yeah. So the areas that are going to be affected, as you would suspect, are going to be the areas that are most prone to flooding, which is usually the barrier islands and direct coastal homes. Mm-hmm. So those are the areas that are going to be most affected, are going to be those barrier island properties, the coastal direct water properties that are maybe direct bayfront per se, and properties that tend to be older, that were built before the construction building codes where you had to elevate a building. They were able to be built what we call slab on grade. Those properties are going to be the most affected by this new rating methodology.
Right. And then I see here is there going to be a cap on the increase per year so people are aware?
Yeah, so the way that this works is Risk Rating 2.0. There's two phases of it. October 1st affects anybody that is new to FEMA, to the National Flood Insurance Program, the NFIP as we call it. And then any renewal business, it's going to affect everybody. If you have an existing policy, you will see the first new rating, the way it's rated, and the first increase April 1st of 2022.
Gotcha.
So it's going to affect anybody that is new business to the National Flood Insurance Program effective here in just a day or two. So it's the 30th, right? So October 1st. Tomorrow.
Yeah, tomorrow's October 1st.
Tomorrow, surprise.
2021. Yeah. Okay, so what else we have here? So we covered that. So I guess for me, and when I'm trying to explain, first of all, if you're working with me or my assistant or anyone on my team, we're going to refer you to Jimmy or a local insurance expert, because I'm not going to try to quote. Now we will say this, that we always ask what the current homeowner is paying, whether it's homeowners or flood, of course, but that's going to change anyway.
That's a great point. So what you still will be able to do, you could still, let's say that you're a new homeowner to this home, and you're saying, well, I'm going to get slapped with this, as new business with these new rates. You will still be able to take over a policy from the existing homeowner that you're purchasing it from, so that you can enjoy that maximum rate increase of 18%. So if you are already with the National Flood Insurance Program, what they're trying to do is they're trying to get away from the subsidized program that it was initially set up to be back in 1968. Mm-hmm. So it's a subsidized program. You're not paying the rates based on actuarially sound data. You're getting a subsidized rate. So that's what they're doing. They're moving to this actuarially based program. It's a software modeling program, not to get too technical, but what they're trying to also do is trying to limit the burden on homeowners that are going to be purchasing homes after this October 1st date. So you will still be able to take over somebody else's policy, and knowing that even if they're only paying $1,000, but the new way they rate says it should be $5,000, you won't have to worry about that jumping from $1,000 to $5,000. It will get there slowly over time. 18% a year is the max that they will increase it per year until you reach that actuarially sound rate that the software says it should be.
That was the question, because I know you pay your premium annually, right? So I didn't know if that was, so it was the 18, no more than 18% per year.
That is the cap. 18% per year is going to be the cap for any existing policyholder.
So then the other question, two more questions I had were like, and I'm trying to figure it out, like what the homeowners are going to want to know, and like agents, and when we're trying to work with people, what they're going to want to know. So like, can you draw us like a little bit of a mental picture of the map of Sarasota and the Barrier Islands? Like, give us a couple of examples of neighborhoods maybe that people might know, and
Sure.
actually, as it relates to decreases, some actually might go down. So touch on that a little bit.
Yeah, so like a good example would be like some of the Lakewood Ranch area or Old Forest Lakes, which Old Forest Lakes has traditionally been a flood zone since FEMA initiated those flood maps. It's always been in an A zone, and anybody purchasing a home in Old Forest Lakes always had, even though it was 6-7 miles inland, had to purchase flood insurance. A lot of those areas are now being reclassified. They're no longer going to be in a flood zone, or even if they are, based on the modeling and the topography maps and everything that goes into the way we now rate flood insurance with this new program with Risk Rating 2.0, they might actually see a rate decrease. So a lot of the inland properties that were traditionally in flood zones, they might see their premium go down by 25, even 50%, whereas the Barrier Island risk, the coastal risk, the older properties that are on direct waterfront, west of the trail, those types of properties are probably going to see that increase, and it's going to be, as much as that 18%. It could be anywhere between that 0 to 18% if you are getting an increase. It's all going to be based on what the modeling says the rate has to be.
Okay, so now this might be a stupid question, but I'm not an insurance agent, so I mean, maybe there aren't stupid questions.
No.
This is
answers.
government regulated, right? So no matter where you go, it'll be the same. Is that true?
So this is, FEMA and the National Flood Insurance Program is a federal program. There's been a lot of talk over the last several years about having these programs on a state level. So a state like a Florida,
like state run.
Yeah, like everyone probably is familiar with Citizens. So Citizens is our state funded insurance pool, right? It's not a federal program. It's an insurance pool for last resort for Floridians. There's been a lot of talk of doing that for flood for Florida. We can still do that. There's nothing precluding Florida from going out and creating their own governmentally backed flood program, but at this time that's not happening. This new rating methodology and the way that they are going to issue and quote policies is on a national level.
Okay, so that answers my question. So I guess if you guys want to have more information about this and maybe you have a website?
Yeah, you could go to gcmins.com. That's gcmins.com. The new website's about to launch actually, so good timing, and I'm always very accessible by phone. My cell phone's right on my business card, and by email.
And what's your cell phone?
It's 941-685-5469. Again, 941.
Say that again.
Yeah, 941-685-5469.
And guys, if you have any questions for me, I can link you up to him. You can click on my website below, shaylatwit.com.